Hello everyone. Today we will be studying about hire purchase transaction. Another question, one practical question based on a hire purchase transaction. Let us see the question. As per the question, information given, Messrs. Presto Company purchase a machinery from Messrs. Cabra Limited on a hire purchase method on 1st April 2017. The cash price of machine was 10 lakhs. An initial payment of 2,50,000 was made on the date of purchase. Balance was paid in 3 installments, including interest at the rate of 8% per annum. As per information given, the installment was paid on 31st March 18, amounting to rupees 3,10,000. 31st March 19, amounting to rupees 2,90,000. 31st March 2020, 2,70,000. Company charged depreciation at the rate of 10% on written down value method. You are required to prepare machinery account and Cabra account in the books of Presto Limited. So very first thing, try to understand who is a hire purchaser and who is a hire vendor in the given question. Messrs. Presto Company has purchased machinery. So Presto Company will become your hire purchaser and Messrs. Cabra Limited will be the hire vendor. We have to prepare machinery account and vendor account in the books of Presto Limited. Let us understand the statement of analysis of payment. So the columns which you will be preparing, very first column is date, then opening cash price, then down payment or principal, then interest, then installment, closing cash balance and depreciation. The transaction date is 1st April 2017. So opening cash price is recorded for rupees 10 lakhs. Initial down payment of 2,50,000 was made. So installment value will become 2,50,000. We will be deducting 2,50,000 from 10 lakhs. So closing balance will be 7,50,000. This closing balance is become transferred on 1st of day of the next accounting year, which will be 31st March 2018. Closing balance 7,50,000. On that day, we will be calculating interest at the rate of 8%. So 8% interest will be calculated on the given value of 7,50,000. We will get the interest amount 60,000. As given in the question, balance was paid in 3 installments including interest, and the amount given is rupees 3,10,000. So here installment price is 3,10,000. This is the interest amount. So the principal balance will be 2,50,000. We will be deducting 2,50,000 from 7,50,000. Closing balance will become 5 lakhs. Moving to the next part, 31st March 19. So for this particular year on 31st March 19, here opening will become closing. So we have recorded 5 lakhs on 5 lakh interest at the rate of 8%, which is 40,000. So for the second year installment amount, including interest, 2,90,000 is recorded over here. We have 40,000. So principal amount will be 2,50,000. Closing balance at the end of second year is 2,50,000. This will become next balance on the opening date. On the balance 2,50,000, we will be calculating interest at the rate of 8%, which will be 20,000. So for the third year, installment amount is 2,70,000. So we are recording here 2,70,000 minus 20,000, balance will be 2,50,000. So like this, we have calculated interest. We have recorded installment. We have shown the principal amount over here. As per information, depreciation is provided at the rate of 10% per annum. So these are the values of depreciation on 10 lakh as the value of fixed asset, 10% every year. So depreciation values will become over here. You can see the working note. 10 lakh minus 10% will be 1 lakh. We are getting the balance of 9 lakhs. On 9 lakh, 10% depreciation is 90,000. You will get the balance 8,10,000. So remaining balance will become 81,000. So this is your statement of analysis of payment. Moving back to the next, ahead is a machinery account. You can see here, as per the information provided in the books of hire purchaser, we have prepared machinery account. On the date of purchase, 1st of April 17, we have recorded two Messrs. Cabra account for rupees 10 lakhs, and year end we have recorded depreciation for rupees 1 lakh. This is first year's depreciation, second year's depreciation, and third year's depreciation. Likewise, all the 3 years depreciation is recorded, and we have calculated balance. Closing balance comes to 7,29,000. So we have prepared this as a asset account. The second account is asking, the question is about the vendor account. So vendor is Messrs. Cabra. As we have discussed in the previous part 1 of this session, journal entries in the books of hire purchaser. So first entry for purchase of asset, which comes to 10 lakhs. Second entry for the down payment, 2,50,000. Third entry is for interest due for the first year. From the table, you can cross-check the values, 60,000. At the end of the first year, installment paid is 3,10,000. So we have recorded to cash. Once you will tally this account, 10,60,000 will be recorded on both the side, and 5 lakhs will become the closing balance. This closing balance of 5 lakh will be transferred to the next period, which is recorded as a balance brought down. So we have recorded as a balance brought down for rupees 5 lakhs. For the second year, interest due entry will be recorded for 40,000. Second installment of rupees 2,90,000. Closing balance at the end of second year, 2,50,000. The account will close here for 5,40,000. Closing balance of 2,50,000 will be transferred to the next accounting period, 1st April 19, as balance brought down, 2,50,000. In the third year, we have recorded interest for rupees 20,000. And here on the debit side, we are recording to cash for rupees 2,70,000. Like this, we have passed the entries in the ledger account of vendor. So in the books of hire purchaser, we have prepared two ledgers. One is asset account. Second one is hire vendor account. Hope you like the video. Please do like, subscribe, and share. Thank you for watching.